Hi there, welcome to kneppyinvests. Only 5 more June quarter group videos to complete, plus one standalone video on Buddy Technologies. And we are in the final week of September, which also means the final week of the first quarter of the financial year. So we'll start to see September quarter reports being released about a week or a week and a half into October. Hopefully, I'll complete all 6 of these videos before that first September quarter report is released. So I do have a little bit of time, and hopefully I will fulfill my mission on doing a video on every single company that doesn't achieve or has achieved an operational cash flow positive June quarter. In this video, the 4 companies I'll be focusing on include 3 mining companies, Central Petroleum, Byron Energy, and AusQuest, and 1 beer company, which is Broo. Nice little play on words there, and that will be the first company I'll be focusing on in this video. Broo is a beer company. They do have 2 products, Broo Premium Lager and Australia Draft. The ticker code is BEE, which of course is the first 3 letters of beer. So if you love beer, maybe this is the company to invest in. However, they have been listed on the exchange for 5 years. So they listed on the 14th of October 2016, and over 5 years, this company really has done nothing. In fact, the share price has gone down a fair bit. So this company has not been a wealth winner for any shareholders who bought into the IPO because they wanted to buy into a beer company. The market cap right now is $11 million. That's at a share price of 1.2 cents. And the cash receipts for the financial year 21 was only about $2 million. And they were operational cash flow negative by $3 million. But possibly they have turned things around in the June quarter because receipts to customers in the June quarter was just over $1 million, which was greater than the first 3 quarters of the financial year. And receipts for those first three quarters was about $900,000. So maybe things have turned around for this company. And instead of being operational cash flow negative for the first 3 quarters of the financial year, Broo was operational cash flow positive for the June quarter by a small amount, but it's still positive, $44,000. One little thing I did notice is they don't have much cash on hand, so they finish the June quarter with only $116,000 of cash. So there is a possibility they'll have to address the lack of cash. So there could be a capital raising in Broo's future. They also repaid some loans, $130,000. So that's one thing you will have to look out for, is a potential capital raising in the future for Broo. That's of course unless they become highly operational cash flow positive, and then they won't have to do a capital raising. Interesting receipts history for Broo because it goes back to December 2016. Thinking things were looking really good from that first quarter to the March quarter 2019. Receipts were going up. In fact, they had increased from $197,000 to $1.4 million in March quarter of 2019. And then for some reason, things just fell away quite dramatically from that March quarter to the September quarter of last year. Receipts fell from $1.4 million to $173,000. I don't know why. You'll have to do a little bit more research to find out exactly why receipts fell away over that 6 quarters. But maybe things have turned around. Receipts have started to grow again, risen from $173,000 to the most recent quarter, $1.0 million. And the June quarter we've just went through was the second best quarter in history for this company. So maybe things are looking up for Broo, but the market hasn't got that interested in this company. And you can see that when you look at the chart. This is the weekly chart for Broo going back to when they listed on the ASX. I did mention in a video I did the other day that one of the reasons I don't buy into IPOs on the day or a few weeks after they do IPO is because there can be a lot of hype in that IPO and the share price can be elevated a little bit more than it should be. And that was definitely true for Broo. When they did IPO, the share price in the second week went to a high of 61 cents. And then it fell from 61 cents to a low of about a few cents in 2019, and the share price has just been sideways ever since then. When you do look at the daily chart, which I did have a look at, nothing to get too excited there. No breakout in the share price, no obvious trend at all. The only exciting thing here when I do look at the chart for Broo is an increase in volume over the past year, but that could be simply because they may have done a capital raising, increasing the shares on issue, and just the fact that there's been an increase in shares on issue just leads to more shares being traded, also because the share price has fallen a fair bit from when they IPO'd. So at this point in time, nothing to get too excited about Broo when you look at that chart, but when you do look at the cash receipts over the past 3 quarters, they are going up, and that's a good sign for this company moving forward. But we want to see a bit of a breakout in the chart, in the share price, and a bit more excitement in the market. Second company I want to focus on in this video is Byron Energy. This is an oil and gas producer and explorer, and even though they've got the word Byron in their name, this has nothing to do with Byron Bay in northeastern New South Wales. Their projects are in the Gulf of Mexico. And if you look at their announcement list they have released over the past month or so, they have released numerous announcements in regards to the effect of Hurricane Ida on their operations. Ticker code for Byron Energy is BYE. They listed on the ASX in June 2005. Market cap, $135 million. That's at 13.5 cents. If we turn our attention to the June quarter results, we have seen receipts $9.9 million, and they were operational cash flow positive $3.1 million. Now, there's a massive difference between the financial year and the June quarter numbers when it comes to the production cost. Development costs. Development costs for the financial year were $34.4 million, but for the June quarter, it was only $1.4 million. So it seems like they've cut their development costs, and that's going down to the bottom line. So instead of being highly operational cash flow negative, which they were for the whole financial year by $13.1 million, they were highly operational cash flow positive for the June quarter by $3.1 million. And with that cash flow in operations for the June quarter, they're able to repay an oil revenue prepay repayment or something like that. They're also able to repay $1.7 million in loans, and that brought their net debt down to $14.6 million. And they're also able to raise their cash from $3.1 to $4.1 million. So potentially things have turned around for Byron Energy just looking at the June quarter results. Though I might have been a little bit excited about the June quarter results for Byron Energy, when I look at their financial history, and this is revenue and cash flow from operations on a half-yearly basis, going back to 2016, they went into started operations in 2018. Nothing to get too excited here. I prefer to see revenue and cash flow from operations increasing through time. We only have 6.5 years of history here when it comes to operations. So it's only really a small sample size, but still we haven't seen any increase in revenues. So nothing to get too excited about the financial history of Byron Energy. And to be honest with you, nothing to get too excited when we look at the weekly chart for Byron Energy. This goes back to 2013. In 2014, share price was above $1 at one point in time, and now it's 13.5 cents. So what I like to see in charts, particularly over a 7-year period, is any sort of uptrend on the weekly chart. And we really don't have that right now. A little bit different when you look at the daily chart. There is a potential uptrend developing in the daily chart, but I would prefer that being replicated in the weekly chart. So at this point in time, it might be worthy to put Byron Energy onto your watch list simply because they had a good June quarter results, and there is a potential new uptrend developing on the daily chart. Next company I'll look at is AusQuest. This is an interesting story because they have receipts from customers of $449,000 for the June quarter and $1 million for the financial year. And my big questions as I looked at this were, where are they getting the receipts from? And I'll talk about that in the next slide. Now, the ticker code for AusQuest is AQD. This is an explorer. mostly gold and copper, Australia, Peru. They do have an alliance with South32, which, funnily enough, is a company I actually do own and actually do receive money from South32. Market cap of AusQuest, $16 million at 1.6 cents. They do have $5.5 million of cash. They spent $2 million on exploration, but received $1.6 million from South32. They also did a capital raising of $650,000. But again, the big question I have is, where did they receive those receipts from? Because they are not a producer from anything I saw. So let's explore that right now. To understand how AusQuest received their receipts or revenue from, I went to the annual report this company released on the 22nd of September, if I remember correctly. And just after the financial statements, they do have a list of quite a few notes. And notes 5 and 15 are relevant for my answers because they do explain where or how they recognize the receipts and revenue they have in their accounts. And it's all about funding from South32. And they recognize as income some administration charges and funding against written off exploration expenditure. Both of those are explained in note 15. Some tricky accounting, in my opinion, happening here. And the way I look at this is AusQuest is not in operations. They are not producing anything. And potentially I should not have included this company in this video because even though they are operational cash flow positive, it's not because they're in operations or they're producing anything at all. When we look at AusQuest's weekly chart going back to 2013, this is one of the most unexciting charts you'll ever see. So over an 8-year period, the share price really has done nothing. In fact, you could say it's trading in a range. Whenever the share price gets to around about 3.6 cents, that is a high. It's reached that 3 times in the past 8 years. Anytime the share price gets towards about 0.6 to 0.8 cents, that's the time to buy. So nothing too exciting here when you look at AusQuest's weekly chart over the past 8 years. And right now, the share price is right smack in the middle of the top of that range and the bottom of the range at 2 cents. Final company I want to discuss in this video is Central Petroleum. They're all about oil and gas. And in particular, they mentioned helium and hydrogen in one of the presentations I did read. They really focused on helium, saying how that's a very rare element on Earth. It's not in the universe, but it is on Earth, and they can get some good prices for helium. So have a look at some of the presentations, particularly if they do talk about helium and hydrogen in those talks. Listed on the ASX March 2006. Market cap presently $76 million. That's at 11 cents. And if we turn our attention to the June quarter results and also have a look at the year to date, cash receipts for the financial year, $65.5 million. And they were operational cash flow positive for the financial year, $24.1 million. That does raise a little bit of interest because that's highly operational cash flow positive. But when you look at the June quarter results, things have turned down. Only $13.2 million in receipts and only operational cash flow positive by $2.6 million. They have a lot of cash on hand, $37.2 million, and they spent $2.1 million on capital expenditure and repaid $1 million of debt. So there are some interesting things here when you do look at the financial numbers for Central Petroleum, in particular the operational cash flow for the financial year and the amount of cash they do have on hand at the end of the June quarter. As we look at the financial history for Central Petroleum, nothing too exciting here. This is looking at revenue, cash flow from operations and capital expenditure going back to 2016 on a half-year basis. Things were looking quite good for this company. Between 2016 and 2019, revenues were increasing. But over the last 4 half years, we've seen revenue drop from $39 million to $28.9 million. And this company has been operational cash flow positive during that period. So that is one positive for this company. And we have seen capital expenditure drop off as well. But it's just that decreasing revenue over the past 4 years. That's one slight negative thing about Central Petroleum moving forward. The financials don't excite with Central Petroleum, and the same thing can be said when we look at the chart. This is the weekly chart going back to 2013. Share price went to a high of about 50 cents at the start of 2014, but then fell off a cliff over a 9-month period, falling from 50 cents to a low of 7.5 cents in the start of 2015. And then over the next 6 years, Central Petroleum's share price has been trading in a range, just like AusQuest. The top of the range is around about 22.5 cents. It's reached that top of the range about 2 times, and the bottom of the range is around about 7.5 cents, and it's reached that about 4 times over the past 6 years. Right now, the share price of Central Petroleum is 11 cents, so it's closer to the bottom of the range right now than the top. But nothing to get too excited with Central Petroleum when you look at the chart right now. That is all I have for this June quarterly group video on Broo, Central Petroleum, Byron Energy, and AusQuest. If you have any questions about these 4 companies or thoughts, I'd love to hear them, so leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.